Welcome to the tutorial on my advanced decline analysis page in the person's lifetime package on TradeStation. First and foremost, we have 6 top stock indices: S&P 500, NASDAQ 100, Dow Jones Industrial Average, the Russell 2000, NASDAQ Composite, and the one that many analysts and most people that are into breadth analysis use, the New York Stock Exchange Composite Index. The reason I'm not so thrilled about the NYSE as a sole representation of looking at market breadth is simply this. When looking at the NYSE, and this is some of the information that I teach, a little nuance about the markets. First off, the New York Stock Exchange Composite Index nowadays only has 68% of the companies are U.S. based. 349 companies are foreign that are listed in the NYSE. Back in the day when Sherman McClellan or, for example, Richard Arms, the Arms Index, came out, it was based off the NYSE Composite Index, and there had been different weightings. Number one. Number two, the weightings have changed through the decades and the years, and that's what traders need to do, adjust for changes. And that's what we tried to strive to do here, and that's what I've put together in this extremely powerful, comprehensive trading package that you've purchased. Number one, with the NYSE, it also now has real estate investment funds. You've been hearing more about REITs, and the more and more companies that get transferred to a REIT category, they are more interest rate sensitive in nature. Number two, we have more bond funds that are valued in price, so that can skew your advanced decline. Number three, look at the sector weightings as a whole. The strongest weight on the NYSE is healthcare with 20%. Next is 16% with the oil and gas. So if healthcare takes a plunge, and if the oil and gas sector takes a plunge, you might not get the strongest weighting or true directional strength of a market. That's why we've created the advanced decline combined with the volume to help us determine the breadth of the market, if it's going up or down, like in the S&P 500. Which to me made a lot of sense when I created this, and that's why I use it and how I share it with you. If we're trading the S&Ps, doesn't it behoove us to understand how many stocks in the S&P 500 are going up and down, and are they going up and down on strong or relative light volume? For case in point, I have included the person's pivots. As you can see, these are the quarterly pivots using a daily chart. How do we know that? Well, just right-click, go to Format Analysis, and you will see your quarterly pivot, person quarterly pivot, right on your screen. Another way of finding that out is look at the red line. What's the distance between the time horizon? From April to July, that's 1 quarter. So you know if this started in July and it's now August, that's got to be a quarterly pivot. Next, we have the advanced decline so that we can take the individual reading on a day-to-day live intraday basis. Notice that the advancing stocks today, or at this point of the recording, was 370. It just changed on us here, and 126 declining. And that number changes throughout the day. Note that we calculate, and this is real-time calibration of the change from day to day. So this is actually calibrating a live chart pattern of the difference between the advances versus decliners, and that's why we call it cumulative. Next, you'll notice that we have 3 colors. Purple is the actual AD line. Blue is a longer-term moving average, and yellow is a shorter-term moving average. So when we look at the both moving averages crossing over, both moving averages pointing up, and the AD line screaming to the upside, this would tell you that we have a larger or higher degree time frame change in the breadth of the market. And so as the market's been trying to go down and the advanced decline's not really been cooperating, nor so have we seen accelerated downside in volume, this would give us a better clue that if we are to be looking at a bullish person's pivot day. In other words, the daily gives us a defined bullish outlook. So to demonstrate, let's pull up a 60-minute chart with person's daily pivots. How do we know that? Right-click, Format Analysis Technique, and you'll see person's daily pivots. All right. So we have the person's pivots, and you can see this is the blue is above the gold. Typically, blue is above the gold. That means it's a bullish day. We also note that the green, we have a higher green. Even though we have a slightly lower red, we still have higher low in the marketplace, and the blue is above the gold. So we have strong reversal in the AD lines, A. B, looking at the overall breadth of the market, helps us to determine, gee, if the market comes down to support and we get a buy signal, perhaps we should be looking at maybe a long entry. That'll help you on a daily basis. Next, we also have our histogram showing that the market went from negative to positive, and overall, look at the 60-minute on-balance volume. As the market is making less, or at least it hasn't broken out yet to newer highs, the on-balance volume has. So with strong breadth, strong volume, buy signal mode on a PPS bullish day, we have at least a very educated and highly advanced technical system telling you don't sell short yet, or look for long entries still until those conditions change. Now, when you look at the breadth and you look at the volume and you look at this volume, most people would say this is a very light volume rally. It won't hold, but we have strong breadth. We have an uptick in the OBV, and you're already and have been in a PPS buy mode. So combined, our indicators are there to help you make better informed trading decision. After all, that's what people want. Just give me good tools, let me do my job. But if you're handed the wrong tools, it's going to be tough to do the right job. And that's why we're pleased that you have invested in both your time and resources in this product. Thank you. I hope you found value in this educational video.